Hello again, traders. Doing job there from Drfx, swing trading mentoring. Going to be taking a look at a possibility in terms of a trade on the Canadian Swiss franc, which could present itself within the next 4 to 12 hours, as well as take a look at the trade that we are now in on the Euro Aussie dollar, as this currency pair heads back inside of the consolidation following a false breakout reversal. Also going to be taking a look at the Aussie US dollar, which also has a false breakout reversal setup, but because of the three-wave rule, this could actually lead to a reversal instead of the market actually heading back inside of the consolidation, or at least heading back to the resistance boundary. It's already back inside of the consolidation on a daily chart, but because of the three-wave rule on the 4-hour chart, the movement back to resistance may not be completed, and we could actually see the market reverse and possibly form a small consolidation setup. Now, of course, everything is done within the context of this trading strategy that basically targets trading gains of between 50 and 70 pips within 24 hours. And in some cases, where justified, trading gains of between 30 and 50 pips will also be targeted. Now, this is a possibility that I'm seeing on the New Zealand Swiss franc, where we could see the market form this consolidation setup on a 4-hour chart. And what could take place is that to form another bearish movement, the market could start this movement with an ABC setup that would continue to break below this uptrend line. So if the signal is given with a strong bear candle, then we could see the market head bearish and head back to the support point, where it would then rally and form another bullish wave, as it makes its way back up to the resistance point here. It would then form another bearish wave to complete the formation of the resistance boundary, and in so doing, complete the formation of the overall consolidation setup. Now, in terms of the trade that was done, the basic situation or the basic idea was that the market had formed a consolidation setup in the form of a range on its daily and 4-hour charts, and had formed a strong bullish reversal signal following the failed attempt to start a breakout bearish below support. Now here you can see examples from the trading manual of the different ways in which the market can start false breakout reversals. It can do so, as you can see here, with a simple reversal, or on the right hand side here you can see that the market could also provide us with more elaborate signals in the form of double bottoms or double tops in the case of a bearish reversal, ABC signals, as well as small consolidation setups that lead to the movement back inside of the larger consolidation setup. Now, a few days ago, this was the expectation that I was looking at in terms of how the market could start the reversal. This is a range setup here, and what I was thinking was that the market could reverse with this ABC setup, as you can see here on the right hand side. This would be the A, the B, and the C would be formed at the low point here, followed by the strong bullish signal that will take us back inside of the consolidation. So this would be similar to what we see here in terms of how the market could start the reversal with this reversal signal. However, instead of actually providing with this signal, the market actually provided us with another reversal signal in the form of the double bottoms here. Strong double bottoms followed by a strong bullish signal to confirm the start of the movement back inside of consolidation, and to indicate that we're going to see the market head back inside, not only continue the movement back inside, but to head back towards the resistance boundary. So the idea was to take advantage of this expected movement back towards the resistance boundary. And so the next step was to wait until the 4-hour chart provided us with an entry setup to indicate the continuation of this bullish movement. This was what was possible, as I had indicated on this chart, in terms of a signal that was needed on the 4-hour chart to confirm the movement back towards resistance. So the bullish movement had already started, which led to the formation of this bull candle. And so what was needed from the 4-hour chart was a follow-up signal to confirm the continuation of the movement bullish, and also to provide us with an entry signal. As you can see here, the entry signal was provided in the form of this. You could call this a bullish engulfing candlestick formation or a morning star formation that indicated that the market was in fact going to be continuing its movement back to resistance. So the entry setup to take advantage of this expected rally was to enter the close of this candle and target the price of 1.5883, which is basically at the resistance boundary. And to protect the trade, the uptrend line on the 1 hour chart was going to be used to place our stop loss at 1.5763. So the expectation is that the market is going to continue its movement back towards resistance and hit our trading target for a trading gain of approximately 63 pips. So overall, essentially what is taking place on this currency pair is that a false breakout reversal has started with a strong double bottom formation, followed by a strong bull candle that has closed comfortably above support. And the expectation is that the market is going to take us back towards resistance boundary, which would be our trading target at 1.5883. Entry took place with a bullish signal on the 4 hour chart, whereas the stop loss area on the 1 hour chart in the form of the trend line, the uptrend line, was used to protect our trade. So we're going to be hoping for a trading gain from this setup as the market continues its movement back inside of the consolidation and back towards the resistance boundary. Euro pound also looks as if it could be forming a consolidation setup. Here we see that this was a possibility in terms of how the market could continue this movement. You can see that the market has already provided us with this bearish wave and this bullish wave, and had started this U-turn at this area here. So the possibility that I was looking at was that the market would provide us with this possible bearish signal that would indicate the start of the movement back down to support. But instead of doing that, the market rallied at this area here and essentially created a higher high above this previous high, which has changed the angle of this potential resistance boundary a little bit. So this has also changed the angle of the uptrend line, and the possibility still exists that the market could provide us with a bearish movement, breaking this trend line and then providing us with a strong bearish signal that would start a downtrend. So one of the possibilities is that it would be forming a double top formation with this area here representing the first part of the double top and a potential U-turn at this area here that would break the trend line, would essentially create the second part of the double top formation. Aussie US dollar, this was shaping up to create a false breakout reversal setup on its daily chart, following the failed breakout bearish below the support boundary. This was what I had seen a couple of days ago, with the expectation that following this bullish U-turn, the market would continue its movement back inside of consolidation and eventually make its way back to the resistance boundary. As you can see here, this has in fact started with the market breaking above the support boundary here. And so the expectation was that this would continue the movement back to resistance. But there are two things that were telling us that the market may struggle to actually reach this area here. The first is the fact that even though the market has broken above the support boundary and is back inside of the consolidation, these candlestick signals are very weak. So that's the first red flag. The second red flag that I'd seen was the fact that as part of this trend that I started on the 4-hour chart, the market had already formed 1, 2, 3, and this fourth setup as part of this trend. And as you know, based on the 3-wave rule that controls movement in the market, usually after the market has provided this many setups, the trend has a tendency to come to an end and at least move sideways, if not reverse. And as you can see here, this is exactly what has taken place. This was a projected reversal, and this is exactly what is taking place with the market breaking below this uptrend line. So if the market is going to be heading towards the resistance boundary, it looks as if it's going to be taking a break, at least in the short term. But what is also possible is that the market could actually form a consolidation setup. And so this bearish reversal would have to continue, and it could actually and then lead to additional bullish and bearish waves. So this is a possibility in terms of what could take place on this currency pair. In addition to the still possible reversal that takes us back towards the resistance. So as long as we're still above the support boundary, the market still, technically speaking, is still bullish and still has a potential to rally. So this pullback may be temporary, but if it breaks below this support boundary convincingly, then it's likely to indicate the start of a movement bearish that would take us down towards this area here as part of the formation of a smaller consolidation setup. So again, from the trading manual, this is a three-wave rule that is in effect, and which is what controls when trends come to an end. So after the market provides 3 or more setups as part of a trend, the fourth setup usually fails, and it usually leads to sideways movement and the possible start of a reversal in some cases. But if the trend direction is going to continue, the market would resume its existing trend direction following this period of volatility and sideways movement. It may even pull back temporarily and then resume the existing trend. But at the very least, what usually happens and what is expected is that after the third setup, the fourth or maybe even the fifth setup, if it reaches that far, you will have to always assume that this is going to take place. Canadian Swiss franc has formed its consolidation setup and could also be heading back inside of its consolidation with a false breakout reversal signal. This is a setup here that you can see on a forward chart where the market has failed to break out bearish. It attempted to do this with this bearish candle here, but was taken out by the sharp reversal bullish that has taken us back inside of the support boundary. So it is possible that this is the early stage of a start of a reversal that eventually takes us back towards the resistance boundary. So what could take place based on the candlesticks signals formed so far is that we could see the market form this ABC reversal setup, ABC reversal signal that, as you know from the previous graph from the trading manual, is one of the signals that leads to reversals back inside of consolidations. So this is the possibility in terms of how the market could continue this reversal, and so this is what is going to be possible from this currency pair. I would say within the next, we would need at least 3 more candles to form the BC area ahead of the formation of this bull candle. So we're going to need we're talking about probably 12 to 16 hours before the market could potentially provide us with this signal. So in summary, the main highlight is that we're in this trade on the Euro Aussie dollar as we take advantage of the false breakout reversal on the daily chart as the market heads back inside of the consolidation and back towards the resistance boundary. Aussie US dollar, this is potentially shaping up to be both a false breakout reversal or a reversal that leads to a sharp bearish movement as part of the formation of a consolidation setup because of the three-wave rule. So the three-wave rule will either represent a temporary pullback before the market resumes its movement back to resistance, or it could represent the start of a reversal that leads to the formation of a smaller consolidation setup. And finally, the Canadian Swiss franc. This is in a consolidation setup as well on its 4-hour chart as well as on its daily chart, and we could be seeing the start of a false breakout reversal as the market heads back inside of the support boundary and potentially within the next 12 to 16 hours provide us with a strong bullish signal in the form of an ABC setup. So that is what I'm seeing here in terms of these currency pairs. And all of this again is within the context of taking advantage of these movements and capturing a trading gain of between 50 and 70 pips. And in rare cases, trading gains are between 30 and 50 pips. So if you have any questions, let me know. And we're going to be waiting patiently until that trade on the Euro Aussie dollar has been completed.